Hello traders, you are welcome to this video and I especially welcome you back to the Forex Geek channel. Okay, now in this video we will discuss the self-adjusting RSI indicator. Now I like this indicator and I actually like the name as well, right? So it's quite a unique indicator that is designed to provide a more accurate representation of market conditions than the traditional RSI. So I'm just going to add it to the chart right away. It is a custom indicator, right? So you need to download it from an external source and add it to your indicators library before you'll be able to make use of it on your chart. So you can see how the indicator looks like. It is quite different from the traditional RSI indicator. Okay, the traditional RSI indicator uses a fixed calculation. Okay, it uses a fixed calculation, but the self-adjusting version, which is this self-adjusting RSI indicator, it dynamically alters its parameters in real time to reflect changing price action. So you can see that this is quite a unique indicator, and that is the reason why the name is called self-adjusting RSI indicator. So its ability to adapt makes it quite effective, all right, when it comes to identifying potential turning points, overbought and oversold levels and trend direction as well. But this indicator does not guarantee profit nevertheless. Okay, now let's just get right into how to get good trading opportunities with this indicator. Now, one of the things to note is that the indicator it mostly moves within the middle of the indicator window. Like in most cases, as you can see, in most cases, it is just moving within the middle of the indicator window. So the nature of overbought and oversold conditions given by this indicator is not such that will require the indicator to rise to the top of the indicator window for overbought or drop to the bottom for oversold. No. Okay. So whenever you have the indicator, the blue line to be precise, whenever you have the blue line to be precise, trading, or rather trending upwards, all right, whenever you have it trending upwards, we're just going to look at a few examples. Whenever you have it trending upwards, especially when it just bounced off the green line, because sometimes the green line will serve as a dynamic support in the indicator window, right? So whenever you have the indicator trending upward, the blue line trending upward, especially after it has bounced off the green line. So you can see that I just pointed out two examples. This first example, you can see that the blue line got to the green line and it bounced off it after dropping below it a little. It bounced off it and started trending upwards. This shows there is bullish momentum. All right, it shows that there is bullish momentum. So you could have considered entering a buy after you get your confirmation, because the indicator has already given you a signal that we have bullish momentum. After the blue line bounced off the green line and started trending upward, it was already your signal. So it's just for you to look for precise buy entry points. And you can do that by making use of trend lines and finding bullish reversal candlestick patterns, So for example, you can see that we had this bullish engulfing here. So it's been a good time to enter a buy. And then for your sell signal, I would actually recommend using any other indicator of your choice or using resistance zones, okay, to determine your exits, all right? Because if you want to use this indicator to determine your exit, you might find out that sometimes the exit signals it gives you might be mere pullbacks, okay, and you end up missing out on the remaining part of the trend, okay. But if you still want to make use of this indicator to to confirm your exit signals, and that is actually fine. Okay, because I actually recommend using this indicator in a trending market, yeah, to prevent false signals. Use it in a trending market. So whenever it is giving you a signal to sell, for example, the blue line bouncing off the red line, that's going to be your sell signal. The blue line bouncing off the red line and trending downwards, it's just going to be a pullback so long as that is a buy trend, unless if the breakout has been confirmed, unless if you have a bearish breakout confirmed. For example, here we had a bearish breakout confirmed, and you can see that around that point or just before that, we had the blue line drop below the red line, and you can see it bounced off the red line a bit, right? You can see that the blue line also broke out of this trend line that I drew here, indicating the increasing buying momentum. So as that breakout happened, that was a confirmation for a sell. So in such cases, you can go ahead and enter a sell after your breakout has been confirmed, and then you can look for sell opportunities so long as the blue line is now trending below the red line, while the green line will now serve as a support for the blue line. Okay, so in that case, after entering your sell, you can wait for the blue line to drop below the green and start trending upwards, then exit your sell trade. Or you can just decide to use support levels, to confirm your exits, or use other indicators as well. All right, so basically, just a very quick recap. What you should be watching out for is the blue line. The blue line is the main signal indication for you. Okay, the blue line should be bouncing off the green line for a buy confirmation, and so long as the blue line is trending upwards above the green line, it shows buy momentum. On the other hand, for a sell, the blue line should be bouncing off the red line, trending downwards, as we can see, trending downwards. That shows sell momentum. Or when it trends downwards, it shows that there's some momentum, right? But when you want to exit, you can just use the the dropping below the green and point upward as your exit signal to exit your sell trade. Okay, so it's as easy as that. All right, nothing complex. Okay, so whenever you are trading, ensure that you always employ good risk management. Do not trade with an amount that you cannot afford to lose, and ensure that you do not risk more than 2% of your account balance in a single trade. Okay, and make sure you always observe good risk management, good risk to reward ratio, I mean. So if you're risking $1 in a trade, you should be targeting at least $2 in profit. Okay, that's going to be a risk to reward ratio of 1:2. All right, so that is it for this video. I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to hit the notification bell so that you do not miss out on more trading videos like this. In the meantime, thank you for watching and happy trading.